We're all trying to figure out what's actually happening here. I mean, it's like the question we ask every time. What is actually happening here? I know we're living through somewhat of a crypto winter in summer, and I think everyone's asking, is it going to reverse in winter? Meaning when we actually get to our own winter, do we have some kind of reversal here? What do you think?
For us at CoinShares, the view is we're going to stay where we are for a while. There are no near-term upside catalysts. We have yet to see Bitcoin in a recession. Arguably, are we in a recession? We don't know. But with what's going on in the Eurozone, around the world, and here in the United States with the Fed hiking rates and cutting back on their open market activities, certainly expect more pain ahead for tech stocks, growth, and also crypto. I think the big question is, what are traders doing? What's happening in markets? We obviously had a lot of liquidations, a lot of insolvencies that had a massive impact on the market. Think Archegos or bigger. We're talking about 10, 20, $30 billion of capital that has been basically sort of evaporated overnight, liquidity that's gone out of the system. And we haven't yet seen the full impact of that because most of the companies in this industry are not publicly listed. So we don't get that transparency we normally see.
So what do you think the downside is at this point for those who are looking at, let's actually think about it like this. Before it was just, it felt like for a lot of people, a runaway train, people wanted to get on that train. Before it ran away, it ran away briefly and then came back to earth. What do you see over, let's just say the next, call it 24 months? I don't know if you should even look at 5 years. Is this one of those things where people are resetting their expectations, saying maybe it goes from 20,000 over the next 4 or 5 years to 40,000? Is it still $500,000, $1 million a coin on Bitcoin? I mean, and then how do you look at that versus what you think of as the potential downside risk?
Yeah, that's a great question. And I think that's absolutely the right framing for long-term investors, which is what we're focused on. Look, Bitcoin is and has always been a secular trade. It's a very cyclical asset. It goes through these cycles of ups and downs, highs and lows. Historically, drawdown from peak to trough has been 80 to 90% in Bitcoin. We're currently sitting at about 65% from our all-time highs in November of last year. So there is still room for some downward correction. We at CoinShares don't see Bitcoin going below that 14K threshold, and we've seen strong support around 20K. But again, we're looking at this. I think in the next 24 months, we will see new all-time highs in Bitcoin. Now, there is a long tail of other crypto assets. You made the point earlier, let's get that Solana ticker up there. Right. There are obviously emerging crypto assets like Ether and Solana that have differentiated and no longer have a beta of 1 to Bitcoin. And then there's a very long tail of crypto assets that I think will go to zero, that don't really have any long-term prospect, as we've seen with so many tech stocks as well.
And when you think about where, I mean, there was a period of time where people said, look at where the engineers are going. If the engineers are spending time on whatever that new crypto coin is, that's where you should put your money. What are you seeing in terms of where engineers are going, or engineers just fleeing? Because you are hearing that part as well.
Yeah, look, I think the important thing is it's no longer just about engineers. At the end of the day, I'm a TradFi girl, right? It's all about fundamental sustainability of these businesses, whether it's a company in the case of tech stocks and crypto companies like Coinbase and others, or whether it's a protocol. You still need to have money to be able to pay people. And the sad fact is that many of these projects, these protocols, are going to run out of money to pay engineers. Many companies that raised at really high valuations are going to have challenges attracting top talent who want to work in the industry but are looking for that risk-reward opportunity that's currently not there. So we are seeing a lot of income and new people coming into the industry. They're choosing to start new companies or join younger upstarts as opposed to taking some of the risk associated with joining a later stage company, really high valuation, not necessarily as much upside.